The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, as we take a look at Monday's market action, double-digit losses in the soybean trade, double-digit gains in the wheat trade, and corn largely caught in the middle. More pressure in cattle as well. We're going to talk about all of that and more. Joining us for market analysis here today, John Heinberg with Total Farm Marketing is our guest. John, great to have you on the program with us once again this week. Thanks for joining us, and hope you had a great weekend.
Yeah, had a great weekend, topped off by a pretty good Packer game last night. So nice to see him playing some ball. That's good. Makes it a little bit encouraging. It was pretty disappointing the first month or so of the season, that's for sure.
Yeah, sorry to Chiefs fans out there, but the Packers got a W in Mahomes' first visit to Lambeau Field. So we'll take it to the bank and run. We won't discuss any of the officiating. We'll just go with it. So, all right, let's talk markets, John. Before we get caught up talking football, let's talk markets and looking at Monday's action. Another strong day in the wheat trade. So, dare I say it, the wheat rally continuing on here as we get into another week, John.
Yeah, very much so. You know, it was good to get that push up through the $6 handle last week on that March contract for Chicago, adding 20 cents today. We got that exporter sale announcement from China, picking up some spring wheat here also this morning. That probably happened last week, which probably triggered this rally. But, just between wheat and corn, even though corn kind of gave it back towards the end of the day today, at least still hung in the positive territory in those front months, the funds are heavily short. That's something I've been kind of watching for the last couple of weeks here, or longer than that, but really focusing on it. They're over 200,000 short on the corn side, and big wheat position that maybe we're in that window here between now and Christmas or the end of the year. They square up some of those positions, fill out their balance sheets a little bit so the month and the end of year statements look pretty good. And that could give us a bit of a limited rally in both those two grains. Now I'll throw in some decent export demand. I like the export inspections numbers today for corn, and like I said, we got those sales and just continued chatter of China looking for wheat. That can add some fuel to a market that's looking for some reason to get out of short positions. And maybe we're starting to build that a little bit here, like I said, going into the month of December.
Well, I think largely this rally in wheat has been very supportive to this corn market here, John, as we've seen. I know you mentioned corn kind of gave it back, but still, though, corn has been holding up decently here the last week or two, thanks to, I think, largely that wheat market trade.
Very mumuch so. And then just like I said, too, where the managed money is, where the funds are, we had that hard sell-off last week going into first notice day. And unfortunately, it probably turned into a situation where there was a lot of basis contracts out there. They had to make decisions. Then the December-March spread exploded to 26 cents wide. So then they had to make a choice. The producer, do I price the corn or roll it, lose the 26 cents? And I think a lot of producers, unfortunately, may have priced the low, at least the post-harvest low with that move. So now we've seen corn recover, reversal the next day on last week, getting some upside momentum. Today even too, trying to get through that 485 barrier on the March contract, kind of finished right at that today. Kind of leaves us up for some more potential upside here. I'm not over optimistic of any type of a big run. To me, if we can get close to the $5 handle, that might be a spot we'll see the corn start moving again, and that'll limit the rally. But again, it's just a window here in the calendar. After we got that post-harvest low in, that maybe this market can start building a little base. The producers who probably needed to sell the grain have moved the grain they needed to at this time frame, and they're locking the bin doors until the first of the year before they need to move some more products. So again, it's a little bit of a window here that we could see some movement. And again, remember, in a high supply year, if you get those rallies, 20, 25 cents off the lows, probably need to be pulling some triggers somewhere and moving some product.
That's a good point you bring up, that a lot of producers might be locking that bin door on corn here until we get through the holidays. I mean, it's one of those things where watching a little bit of a rally here, trying to find some momentum, maybe setting that low as you mentioned. But one has to wonder if someone hasn't done a whole lot on bushels and they have a lot of unpriced bushels out there. Do they need to make a decision here before the end of the year, or can they, afford to wait until the calendar rolls over to 2024? I think that's going to be a big question going on out there for farmers when it comes to corn, John.
Yeah, there's a lot of confusion right now in terms of what the market's thinking or what producers are thinking at the same time. And had a lot of long conversations again with guys today with unpriced bushels in the bin. They're looking at profit margins that are not very good, if not even profitable, just because of the cost and the amount of investment they got into this crop. And that makes it hard to pull the trigger, to pull the trigger on a loss. But I'm a little worried about the first part of the year. There was a lot of extra bushels, a lot more than people thought was coming at them. Some of that got thrown into some cheap storage programs for the first of the year. Again, like I said, some of those bushels had to move out here. But we get back into the first of the year, and then all of a sudden we're going to be sitting down with the banker. We're going to be looking at tax statements, looking at buying inputs, and we're going to need some cash flow. And I think there's a little bit of corn sitting on the sidelines ready to come into this market. So, and with the carry in the market, that makes me extremely nervous. It's still a seller's market. You just roll your short positions to the next month and bleed the carry out, and you're going to be in a pretty good spot if you're a short seller here until we get some type of news change. Now, what can be that change? It's going to be demand more than anything. It was encouraging today to see export inspections where they were above expectations at 1.1 million metric tons today. And maybe that's a little bit of a signal that the export window is starting to open up for corn. Typically, it's after the first of the year. Right now it's typically beans, but bean numbers were below expectations today. Corn numbers were above. So maybe that's a signal right now that all of a sudden, hey, this world might be shifting to the corn side of the market a little bit more. And if we see some decent demand and good product movement, Mexico picked up some more corn today. Again, a routine type sale, but still another sale. That maybe that can give this market a little bit more push here, especially if we need bushels at the Gulf or we need bushels out of the PNW.
Well, I wonder too, corn and wheat too, since we've been rallying here a little bit. I wonder if folks, if there's different things they could take a look at, different option strategies, et cetera here to maybe lock in a floor at least. It seems like just with the way things are moving and the potential for some of that risk in 2024 when we get there in a couple of weeks, that if anything, it's an opportunity here to maybe lock in some price floors potentially here off this recent rally in corn and wheat.
Yeah, especially in corn, I really want to protect that $5 area out to July or out into May. That's one of the questions I'm having with producers. What's your window? Where do you want to ship this? Or when do you want to ship this and get this moving? Let's make sure we protect at least a solid futures price value. Obviously, the basis is going to be a big factor on that. There are some pretty good basis levels out there for the spring months, and I know I got a few producers taking advantage of that. But the key there also is pick up the put to go with the basis contract. Then you lock in your cash floor and keep your upside unlimited. I talked to one producer today too, felt like he had a great basis contract, and all of a sudden the futures market dropped 35 cents on him here since he put that in. So it wound up being basically a pretty negative wash in that regard. So make sure you protect that floor. Just because you put the basis in doesn't mean you lock in the price, obviously. And just, at least give yourself some peace of mind if things go haywire, you've got something in. On the other side of it too, again, this is a market that still seems going to need to challenge. I like selling calls still over the market as well. Collect that premium, challenge that market to rally higher. Selling calls can be a win-win, even though you got to deal with the margin side of the equation. At least if the prices are rallying into that sold call, your bottom line and the bushel value is going up as well. So those are strategies I'm using until we get a change in the trend. Right now, even though we put a low in and we're kind of bouncing off that low, that chart is still a declining chart. And we have yet to find really a significant point where this price is turned around and wants to start higher. And that very well may not happen until we get into the spring and maybe start talking some acre battle and start looking at some of the early U.S. weather.
Good thoughts. Good reminder spot for me to say the risk of trading futures and options can be substantial, of course. We want to make sure we give that reminder like we do at the beginning of every program. John, I want to ask you about soybeans. Breaking through some key support levels here the last couple of days. I'm a little worried that the downside potential is pretty strong right now in soybeans. What do you think about this soy complex?
Yeah, today was very disappointing in that regard. We had a chance to move it off the lows. We were trading positive. Kind of felt like things were coming together a little bit. Maybe we had a low building. And then I got that export inspections number today. Maybe we're still looking at the South American weather. I know that right now the ocean freight charges are a factor in this marketplace. And the bean market just kind of broke loose again. Now we're down testing $13 on the January contract. It's going to be a spot that in my mind needs to hold psychologically. Otherwise, the next downside step is 1275. The biggest thing that's concerning to me, though, is the amount of bushels that are still going to come out of South America, as well as just the uncertainty down there. I mean, you're seeing analyst estimates from 140 to 160 million metric tons. I mean, you do the math on that gap, that's 700 million bushels of beans that could either be there or not be there or somewhere in the middle. And that really is kind of hard for a market to digest. I mean, if it's a 140 number, that's a pretty big hit. If it's a 160 number, then we got a lot of beans. Argentina weather looks good, so that's going to be a concern into the marketplace. I just didn't like the path of the whole products the last few days here. Meal softer, oil softer. We had good strength in them today too, and they all just kind of fell apart to the downside. I think tomorrow could be a pretty key day. Can we hold 13, get some reversal action back in, maybe get some money flow? But right now, those South American beans, at least later into the spring, look like the better value. And with that export inspection number today below expectations and that corn number jumping up, might have been just a signal to the market too that bean export window, which I was thinking maybe would close around the first of the year, might be closing a little bit earlier than we anticipate.
We are having a conversation today with John Heimberg from Total Farm Marketing. John, let's go over to livestock. Cattle, another down day in cattle. We've had a couple up days last week, but I'd say more losses than wins here the last week plus of this cattle market. What are you thinking here? What are we seeing? I know a lot of this has kind of been, we talked about this last week, I think, a lot of funds getting out of this market. Where do things stand now here this week, John?
Today, another disappointing day there. That was a rough open. And I don't know what that was tied to, just maybe some chance to attack people that got a little optimistic of the market and, flush out some weak longs. Then we rallied it back to positive territory. It looked like things were going to maybe find some footing there. And all of a sudden, mid-morning again, sellers took right back over. And here we are finishing at new lows, at least a little bit off the low. To me, it's still about money flow right now. Again, you're still looking at fundamentals that are still relatively friendly. I look at a cash feeder index at 225, January feeders at 210. Something looks undervalued or overvalued in my mind there. Same thing with cash trade, 172, 173, and we're at 167 for December futures. So we got a place right now where the futures in the cash market don't seem to be lining up. And that just tells you, again, it's some long liquidation. Now you go look at some of the longer-term charts, we're at some pretty key spots here that we kind of need to hold, or else we're really going to have some potential breakdown in these markets, even worse than what we're dealing with now. So I'm really kind of hoping those technical levels hold. To me, we still got to probably get into the first of the year. I'm looking to that January cattle inventory numbers. Let's see where the expansion is. Retail values, even though we were softer on Friday, we're still 297 on choice carcasses at the end of the week. Choice select spread over 30 still tells me there's a little bit of demand out there. The Packers are finally getting a little bit of green in their pockets here with this break in price that maybe they can come back and bid up again. We'll see. So I'm a little optimistic that we could be at a bottoming point in here. The volatility today sometimes dictates that. When you see massive price swings, kind of just tells you that maybe we're getting close to a bottom. But sometimes after a hard sell-off like this, the bottoming is a process, not a day. And here we are, re-putting lows in. Do we go retest that low tomorrow? We'll see if that holds. That type of process. We'll see. But boy, I'd sure hope to think our bottom's here. I don't have the fundamentals to prove it to go any lower. But sometimes when the money's moving, it doesn't matter about the fundamentals.
That is a great reminder. Sometimes when that money moves, we just got to go with it until the dust settles. So we're watching that here in cattle. I know we'll get an updated cattle on feed report later in the month of December too. I think that'll be a big key ahead of us here as we get towards Christmas. Hogs, kind of a mixed bag in hogs, a little bit higher in most deferred contracts here on Monday. What's your take in this hog market right now, John?
A few days of consolidation here, maybe just trying to find some direction. We kind of bounced off those lows midweek last week and basically got to this level, $70 on that February contract, and we're kind of holding it. That's where the cash index is right now. But the cash index still trends softer, which makes me a little cautious of the numbers that we're seeing here. Again, we're in that window where weights and numbers kind of on the increase for the hog side of it. So we'll have to watch how things play out. Again, it feels like maybe we got a chance to go retest that 66 low, especially if we don't see some decent product movement the next few days here. A little bit concerned on where that hog market is. So we'll have to kind of watch. But again, then we'll start thinking about into the summer months. Right now, we got a heck of a spread between the front and the back. In that regard, those summer months may be a little bit overvalued here in the mid 90s, low 90s for June, July, and August. So it might be an area to make sure we're still thinking about some protection. Unless all of a sudden we do see those numbers tighten up or the demand pick up, to give some value out there.
How about that dairy market? I see a little bit of green on the screen there Monday. John, any notes in dairy?
That dairy market, again, just a rough run. You look at last week. Now, maybe Friday we put a little bit of a reversal, and it kind of looks like the bottom of the corn market a little bit there. We had so many down days in a row in that January contract, sub 6, pushed it down to the lower 16s, getting a little footing. Good to see the cheese trade and as well as the butter trade pick up a little bit of boost today. So I don't know. This might be a spot that's a pretty significant turning point down there. Maybe we can get some price lift here off of that just on the technical side, kind of like the rest of these markets that I'm worried about going into the end of the year because of short money. So we'll have to watch, but still not a big fan of the milk market in the longer term. To me, any price recovery probably still needs to be met on the defensive side, until we get a better idea where production is, as well as cattle numbers going into 24.
I don't know how much you watched the outside markets on Monday. I know the dollar rallied a bit, and most of the stocks were quiet. Gold had a wacky day, though, set a high, and then drops of $50, John? pretty crazy day there in gold trade.
And we're looking at things in general, and I was just going to kind of bring this point up in our wrap up here. And, the market's got a lot of movement. We're getting to that time of the year. The trading numbers get a little bit on the shorter side. Obviously, we're concerned about what's going on with the inflation rate, what's going on with the interest rates, what's going on with the dollar. And, all those pieces come together. Keep an eye on the money flow. Right now in the ag space, just feels like the funds don't want to own the ag contracts. Over the last 3 weeks, they've liquidated 170,000 contracts, and they got their largest short position in all the ags, net short position, going back about 3 years. So that tells me a couple different things. Number one, is that an anti-inflation play as we're bringing inflation down? Is it just keeping prices down? We are moving into an election year this year, so that could be some of the factors that come into play. Just on how the money wants to flow. That might be a bigger story in the short term, is just where the money is at this time frame. And right now, just even saw it today. We had some strength. Cattle was higher. Corn was solidly higher. Beans rallied off the lows. And also, we just got to midday today, and somebody pulled the pin, and down it all went. And it just makes you kind of wonder where the market's mindset is right now. And that's something that just makes me cautious for producers going forward. If you got some value, maybe it's not home runs here, but if there's some value on the board, I think you need to make sure you're somehow protecting yourself, because the opportunities for prices to continue to slide, especially if production grows in that grain market, especially, is definitely out there, that these prices might look pretty good down the road if we continue to see this negative trend.
John, if folks have questions, I know they can reach you at Total Farm Marketing very easily. How can they get a hold of you?
Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And again, that website, totalfarmmarketing.com.
John Heimberg, always appreciate it. Thanks for joining us today on Market Talk, and we'll talk to you next week.
Sounds good. Have a great week.
John Heimberg with Total Farm Marketing. That's going to do it for the show. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.